You walked into a bank once and felt invisible. Nobody moved. Nobody cared. And somewhere in that building, another person walked in and got coffee, a smile, and a yes. Same bank. Same day. This is not a coincidence. This is a system. And today, you are going to see exactly how it works. In 2008, during the financial crisis, millions of people lost everything. Jobs, homes, savings. But here is what almost nobody talks about. Some people walked into banks during that same crisis and got better deals than ever before. Lower rates, bigger credit lines, personal calls from managers. The difference was not luck. It was their level. Researchers at Harvard Business School studied bank behavior across 14 countries. Their conclusion was simple and uncomfortable. Banks do not treat all customers equally. They never did. They have internal scoring systems that most people never see. And based on your score, they decide everything. Your interest rate, your limit, your waiting time on hold, even whether they answer your call at all. There are 3 levels. Let me show you all 3. Think about the last time you felt ignored by a bank. That feeling had a reason. At the first level, the bank has already made a decision about you before you open your mouth. They have seen your balance. They have seen how often it drops to 0. They have seen your payment history. And in their system, you are flagged as high cost, low return. That is not an insult. That is just math. Banks run on math. Here is a real story. In 2003, a man named James lost his job in Detroit. He had a small account with almost nothing in it. He went to his bank and asked for a small loan to cover rent. Just 1 month. They said no. He went to 3 more banks. All no. He eventually found a payday lender charging 400% interest. That one decision took him 6 years to pay off. James was not a bad person. He was a first-level person in a first-level situation. And the system had no mercy for that. The cruelest part of being at the bottom? You feel the punishment, but no one explains the crime. They never tell you why. They just say no or yes with terms that make no sense. And you leave more confused than when you came in. One clear sign you are there. Call your bank right now with any question. If you wait more than 4 minutes on hold, that is your answer. That wait time is not random. It is a direct reflection of your value in their system. Most working people live in the middle. And here is the dangerous thing about it. It feels fine. Not great, but fine. And fine is the enemy of better. Psychologists call this the plateau effect. When things are just good enough, your brain stops pushing. It sends a signal that says, "We made it. Relax." And that is exactly when most people stop climbing. At this middle stage, the bank trusts you a little. Your salary comes in regularly. Your bills are paid on time. You have maybe 1 loan running clean. They will give you a card with a decent limit. They will approve a personal loan without too many questions. Sometimes they will even call you with offers. Standard offers. For everyone. But here's the truth that hurts. You are still just a number. A good number. But the moment something goes wrong, nobody calls to help you. Nobody negotiates for you. You are on your own. The relationship is transactional. When you need them, they are not really there. Think about Warren Buffett for a moment. He did not start as a billionaire. He started as a young man in Omaha with a plan. He opened his first brokerage account at 11 years old. He did not wait until he had a lot of money. He started building his financial relationships early, consistently, intentionally. That is exactly the mindset of someone who moves up. Not waiting, building. And then there is the top. This is where the rules completely change. Not a little. Completely. Here's a real example. A woman named Sarah worked as a mid-level manager at a tech company. She was not rich by any definition. But over 5 years, she had done 3 specific things. She kept a consistent savings account that grew slowly every month. She had 3 products with the same bank: a mortgage, a card, and an investment account. And she had never, not once, missed a payment. When she called her bank one day to ask about refinancing her mortgage, she did not get a call center. She got her personal manager, who already knew her file. He offered her a rate 1.2% lower than the standard rate on a mortgage that is tens of thousands of dollars over time. Sarah did not negotiate hard. She did not have a powerful lawyer. She just had a level. Science backs this up. A study published in the Journal of Finance found that customers with multiple products at one bank receive significantly better loan terms than single-product customers with the same income. Not slightly better. Significantly better. The bank is not doing this to be kind. They are doing this because you are profitable to them. And profitable clients get protected. At the top, interest rates drop. Fees disappear. Credit limits rise without you asking. And when a problem appears, it gets solved in one call. Not because they like you, because losing you costs them money. That is the only language a bank speaks. Most people approach banks from a position of need. I need a loan. I need an extension. I need help. The people at the top approach banks from a position of value. They are not asking. They are choosing. They say, here is my money. Here are my products. Here is my history. Now tell me what you can offer me. That one shift in posture changes every conversation. And here is what kills most people's chances before they even start. They think getting to the top is about having a lot of money. It is not. It is about looking stable and valuable to the bank's algorithm. A person earning €3,000 a month who saves consistently, holds 3 products, and never misses a payment can get there faster than a person earning €10,000 who spends everything and bounces between banks. The algorithm does not care about your salary. It cares about your pattern. So what do you actually do? 2 things only. First, find out your credit score today. Not tomorrow. Today. This is the number that tells the bank where you stand before you say a single word. If it is low, that is not a judgment. That is your starting coordinate. You cannot navigate without knowing where you are. Second, open one savings account and add to it every single month. It does not matter how much. What matters is the pattern. Banks use machine learning now to detect behavioral patterns in your account. A consistent upward trend in savings is one of the strongest signals of stability their systems recognize. Even €50 a month, done consistently for a year, starts to move the needle. Remember James from Detroit. He eventually rebuilt. It took 6 years because he did not know these rules. You now know them. His 6 years can be your 6 months. The bank will never explain this to you. It is not in their interest. A confused customer stays at the bottom. And customers at the bottom pay maximum fees and maximum interest. That is their business model. Your job is to stop being that customer. The person who got the coffee and the yes. He did not start there. He started at the bottom, just like you. He just learned the game. And then he played it on purpose. Now, so can you. If this opened your eyes to something real, subscribe, because the next video will show you exactly how to move from where you are right now to the place where banks start working for you. Not you working for them working for you. That is a different life. And it starts with one decision.